Hi guys, welcome back to TipRanks. My name is Annika and here at TipRanks we love to hear what different stocks you're looking at and your opinions on the market sentiment. Today we're looking at two strong buy stocks that are flirting with the bottom, aka they're two stocks that are great buy the dip stocks. Also guys, before we jump into this video, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. And also guys, TipRanks TV is now live and this is where you can watch all our financial content in an ad-free space. So definitely check that out. I've linked it down below in the description box and in this video. And also just a friendly reminder that tomorrow on Tuesday, 8th of March, Julie and I are co-hosting a Leading Women of Wall Street workshop panel session. All the details for timings are also linked down below in the description box. So even in the stock market, everyone wants to buy cheap. But what does buying cheap even mean? Many define it as a bargain stock price, but there's also a lot of stigma that is associated with low stock prices. This is kind of because in reality, the prices of most stocks don't fall without a reason, especially when it can be rooted in poor company performance. But many times, fundamentally sound stocks can be lower in price because of market volatility external to the actual fundamentals and the intrinsic value of that company. So there's actually plenty of low-priced equities out there that are strong in fundamentals and future prospects. This is sort of the way in which Warren Buffett invests. As he says, he likes to buy quality merchandise that is marked down. So today we're looking at these two stocks that are undervalued, but they are strong buys because they are fundamentally sound and they have great future prospects. The first stock is Bandwidth and its ticker is BAND. Bandwidth's products are cloud-based and they are marketed for enterprise use. So improvements in communication have long been major drivers of technological innovation and economic expansion. Just think about the way that the telegraph and then the telephone and then later wireless telegraphy and voice and finally emails, instant messaging, voice over internet, and all of this has changed the way that we manage our world affairs, consume news, and just keep in touch with friends. So Bandwidth lives in the digital communication world and it's been there for around 20 years or more and it's provided voice over internet protocol services, and more recently the company has focused on offering communications platform as a service. And Bandwidth's products, as we said, are cloud-based and they're marketed for enterprise use. The company offers solutions for a wide range of communication issues and uses. This includes voice, messaging, and video APIs, voice over internet protocol systems, emergency calling, and other options. Bandwidth APIs are used by major industry names like Microsoft and RingCentral to embed voice and messaging functionality into their own applications. The current price for Bandwidth stock is $27.89. The analyst price target on Band is $72, which is a whopping 158.16% upside based on 12 Wall Street analysts offering 12-month price targets. Now, despite Bandwidth's widespread use and success, the company's stock is down 77% over the past year. For the most part, it has been a gradual drop, as you can see on the chart. But Bandwidth shares have lost 43% in the last week of February following the release of its Q4 full year 2021 results. At first glance, this drop seems counterintuitive, since Bandwidth reported a modest net profit of 9 cents per share, where a 13-cent EPS loss had been expected, and revenues were at $126 million, and these were well above the year-ago figure of $113 million. Gross margins on the core CPaaS products were up as well, rising from 51% to 53% year-over-year. But the guidance was considered weak. Analysts had expected the company to guide toward a Q1 2022 EPS profit of 7 cents, but management is predicting a loss in the range of 7 to 11 cents. Adding to that trouble is Q1 revenue guidance of $125 million to $127 million, was $4 million lower at the midpoint than had been forecasted. But five-star analyst Mark Murphy from JP Morgan is bullish and he gives it a buy rating with an $81 price target, which is a whopping 190.43% upside. And he says that even as it navigates through multiple overlapping headwinds, Bandwidth is still expected to grow about 12% at the midpoint of revenue guidance and generate a modest profit, with potential for growth rates to pick up as the year progresses and into 2023. We observed that the current multiple of 2 times EV over CY23 revenue has approximated a trough zone for band shares in the past and could represent an attractive level for patient long-term investors who are willing to lock through the near-term headwinds. The second strong buy stock that is nearing a bottom is Goosehead Insurance, and its ticker is GSHD. Goosehead is a Texas-based insurance platform. The company is an independent personal lines insurance agency, which offers insurance buyers unparalleled choices in companies and products when selecting insurance policies. Goosehead was founded on the premise that more choices will keep the prices down, and that an educated consumer is the best customer. And the agency has 9 sales offices, over 1,400 operating and contracted franchises, and represents over 140 insurance companies. The current price for Goosehead Insurance is $66.16. The analyst rating consensus is a moderate buy, and the analyst price target is $127, which is a 91.96% upside based on 5 Wall Street analysts offering 12-month price targets. In the past year, Goosehead has seen volatile trading on the markets. The Goosehead shares started 2021 with a 41% loss before rising to a peak above $177 in October. And since then, the stock is down 61%. During the same time, Goosehead's revenues rose year over year, climbing 29% from $117 million in 2020 to 2021's $151 million. Q4 revenue gained 16% year over year to reach $40.2 million. On a negative note, EPS missed expectations, coming in at 6 cents compared to the 8-cent forecast. But if we look further in, Goosehead shows some positive metrics that are great for the future. The company increased its sales force headcount during the year by 39% to 506. Full year 2021 written premiums were up 45% to $1.56 billion, and policies currently in force during Q4 2021 rose 42% year over year to 1,011,000. JMP Securities analyst Matthew Carletti is bullish and deems it to be a buy with a $155 price target, which is 134.28% upside. He says that the personal lines market is massive, and roughly 36% of this is in the independent agency channel where Goosehead is focused, with growth in this channel outpacing captive agencies in the recent years. And he also says that the independent agency channel Goosehead still has a very small market share. We estimate around 1%, as it continues to ramp its agency force and as recent agent additions ramp toward full run rate production. Also, there is a mechanical revenue increase built into the second year of every policy, as Goosehead incents new business production with larger economics than renewal business. Bottom line, we think Goosehead has significant runway for sustained strong growth well ahead of peers. So guys, those are the 2 strong buy stocks that are nearing a bottom. Let us know what you think of these 2 stocks. Leave your thoughts in the comments below. We love to hear from you. Also guys, TipRanks TV is live, and this is where you can watch all our financial content in an ad-free space. I've linked it in the description box and in the video. And guys, if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Also guys, tomorrow on Tuesday, March 8th, 2022, Julie and I are co-hosting the Leading Women of Wall Street panel session. I put the details down below in the description box. Also remember, none of this is financial advice. Make sure you do your own research before you invest in anything. Thank you guys for watching, and I will see you in the next video. Bye!